Welcome back to another trade breakdown. Today's Friday. I want to talk about something pretty serious here. If you've been watching my video or this is your first time watching a video, I want you to know one thing. I look at everything, okay? And I don't want to sound creepy, okay? But there's this thing called on YouTube, analytics. Everyone knows what analytics are, okay? From time to time, I go and check the analytics of some performing videos, right? One of my videos right now has over 300 views. And so I'm like, okay, well, let me go ahead and check the analytics. Maybe I'll learn a thing or two on how to post, when to post, who watches my videos, from where, is it on the For You page, whatever. I look at the analytics. And there's one thing I noticed with every single video I post. Not one person, not one, watches from the beginning of the video to the end. Is that a problem? To me, yeah. Is it a big problem? No. But this actually brings up a point to which I don't know who talked about it, but I remember seeing it on TikTok, and they made a joke about ICT, right? Inner Circle Trader, right? ICT. They made a joke that he made a playlist of all his videos, right, of the ICT 2022, 2023, 2024 membership, core content, whatever. And the first video had like 2 million views. 2 million views. I watched his first video of that playlist. And you know what the last video had? Maybe 100,000 views. So that means, and the joke was, at first, people start watching everything and they watch the whole thing, and there's a lot of people introduced and there's a lot of fake people. And at the end, only 100,000 people stayed to really learn what this was about. 2 million to 100,000. So why am I saying this? I'm saying is that the 100,000 people that stayed behind and stayed to watch every single video all the way to the end are the real ones. So right now, yes, I'm not famous. Will I be famous? I don't fucking know. I'm trying to be, yeah, sure, but I don't fucking know. Destiny awaits, I guess. Am I trustworthy? I don't know. Am I credible? I don't know. Why should you wait and watch the end of this whole video? Because you're going to learn a lot. And I don't want you skipping through because I'm boring. Because if you can't watch ICT for a whole hour, then you got a problem. If you can't stay focused and take notes for more than an hour on a guy that's talking exactly like me, and I'm talking faster than him, bro. You should wait until you hear him. So I'm being nice. All I'm asking is that you show character. You show that you want to learn. And if you show that, then I will show you even more. Okay? Let's get into it. All right? Let's go ahead and do just a nice, weekly recap. Okay, I like to do that. So, like I've talked about, right, previous months ago, we see this very huge bullish price action that happens on SPX. All-time highs are at this red line right here. NQ and Dow Jones have already hit their all-time highs. QQQ has already hit their all-time highs. So the only one lagging behind is SPX, or the S&P 500, whatever you want to call it. So my bias is that, okay, well, wants to hit all-time highs, like its best friends, you know? So last week was kind of like, it was like an expected week, but unexpected. It was expected because we had swept that previous high. This would be the last high before all-time highs. So we sweep that high. And then what do we get? We get a very nice move down. I'll draw it again into, I guess, this weekly fair value gap here. What shows bullish price action to me in my case is that price didn't trade near the consequent encroachment. So yes, you can argue, yes, it went down. Sure did. Look where it closes though. Okay. It trades down, but it doesn't trade down like in this area where it's like at almost about to hit consequent encroachment. See, if it showed that, I would be rethinking my bias because maybe it wants to go lower and it only got that far, thus wanting to go lower. So didn't get that low, didn't want that low. So we were dragged back off. So bullish price action on the week. Let's look on the day. I was hoping that the week would hit all-time highs. Unfortunately, that did not happen. But guess what? We don't care. We're not here to predict where price is going to be in a week. We're not swing traders. We're not swing traders. Unless you are, and I'm sorry to, offend you, but we're day traders. The daily. So you can see doji, right? Again, price action wants to bounce back off, shows that doji, very, very nice. Very strong move up, obviously creates a daily fair value gap, and we don't really come back to like retest it or anything like that. So we can kind of just delete that, clear our charts a little bit. And then this where from Wednesday. Okay, yes. So this is, I told you guys, if you watch my video, my weekly recap, I'm pretty sure I did it on Sunday or Monday. I don't remember. I told you guys from Monday to Wednesday I would be trading, and then from, basically Thursday to Friday I would be off the charts. And that's because of CPI and PPI. Okay. Now you might be thinking, what the hell is that? What the fuck is PPI? Listen, it's red folder news, okay? It's high impact news. I also mentioned that even on Wednesday, there was high impact news. Those 10-year bonds and the 30-year bonds on Thursday were also going to be very high impact. So Wednesday would be the last day of trading, right? On quotes, right? Last day. Yeah, PPI or CPI came out Thursday, stayed the exact same, really no impact. And then the monthly had a little bit of impact. CPI yearly came out, so, very high impact news. Unemployment claims also high impact, 30-year bond high impact. And then Friday, not as high impact and volatile as we would like it, but there was core PPI and PPI. So those are things to pay attention to. I want you also to pay attention of where CPI went. So if you were watching it live, you knew that it spiked up and then it traded down. Okay, that's usually how CPI works. It goes one direction really quickly, and then it usually just reverses right back. So if you see it spike down, then it's probably going up. But that's if you're looking at the charts. You can also look at the numbers, the statistics, and you can also say you can also look at DXY. And look where it's going, okay? So CPI usually has a very, very high impact on the market. That means that price will move anywhere, wherever it wants, whenever it wants, or whenever it's released. Anything after CPI is pure brutality for traders. I mean, it's not impossible to trade. It's just a little difficult. And I know if you've been trading for a few years or a few months, you agree with me. So don't even try to fight it. Anyways, CPI does respect some ICT terms, supply and demand, this and that, but you can see it did create a very nice range that went down here. Gotta move this over here. This for when we get to it. Spiked up, I guess took these highs up here, and then liquidity down, displacement down. And you can look at these wicks. You'd expect some kind of fair value gap here, but no, CPI, boom, down. But this wick just takes all that fair value gap right out, trades all the way down. Yeah, no, it's scary. CPI is scary. And then we kind of just buy it all back in. We buy it all. And this was, when was this? So this was Thursday. So Thursday transitioning over to Friday. My bias was what we call neutral. Okay, so because I wasn't in the charts Thursday, or I was watching him, but I just didn't have a bias. I wasn't going into Friday being like, oh yeah, we're bullish because of, well, I don't fucking know. It was neutral. So I had to have some kind of reasoning to be bullish or to be bearish. So you might notice this blue thing, and I'll say right now that it's because of this 4-hour displacement that you see here. Creates a 1-hour fair value gap. And so I was watching this, and you watch how price reacts to this fair value gap, and you'll tell me how you think price will react and what kind of trades I want to take. The first thing I notice is that it gets respected, and this is at 8 p.m. This is like after market. What is this? Friday, 2 a.m. This is what? London session. Gets respected, gets traded lower. And then all of a sudden, out of nowhere, Friday, 6 a.m. So basically Friday, New York session open, straight down. But where does it close? yes, price came down. It traded down under that fair value gap, but the price itself bought its way back up, and buyers were strong enough to buy it back up above the consequent encroachment. That shows something. Next candle, what happens? Same thing, trades down, buyers back out, and they close it even higher. And then at 8 a.m. speaks for itself, wants to break out. And then you have today, what happened? Guys, I'll let you know if you guys were in my Discord and you were paying attention to my callouts in the SPX tab. I'm so sorry. I don't know what the fuck I was doing there, bro. I'm not gonna lie. On my phone, well, because I was on my phone, I was at a school field trip, so I was in the bus basically fucking giving callouts. Listen, when I say I need to be in a space where I'm calm and I'm like alone and I'm like focused, I mean it, bro. I was not focused whatsoever. I wanted to be on the charts at 9:30 and watch and like have a strategy right there. I almost forced it, but I told myself, don't force it, wait for it. And so let's dive in, right? Let's go to the 5-minute. Oh my fucking God, dude. This fucking indicator, dude. All right. So there's a few things that I want to talk about. First of all, I was just not, I was not very, what do you call it? I wasn't very, I wasn't very focused, right? So the callouts weren't great. And I was also very tired, so I didn't really see any of this. But I did see the New York Open happen, and you'll see, why did it shift? Okay, whatever. You'll see that what happened was I had this 1 hour fair value gap, and I was like, okay, well, this is a high time frame PD array. If we react off of it, the 5-minute, you can see we did at around 8, right? Then we have these like market structure shifts on the 5-minute. So I marked that out. But at first, this is what I had marked out. I didn't even have this marked out because I was so fucking in my head, bro. I'm pretty sure I had like something like this, bro. I had this marked out. I had that marked out. So I was waiting for this. So when I told myself, oh, this is a 5-minute market structure shift, even though this is the real one over here. So then my standard deviation was from this low to this high. Okay, standard deviation where? Here. Okay, so then I was like, if you look carefully, this new standard deviation here, this is what I had called out. I was like, oh yeah. Actually, let me try to find the charts for you guys, or the callouts, because they were bad. I'm sorry. Or is it? Okay, here. Okay. So as you can see, market structure shift here, and you can see that standard deviation, right? I had it like that. It was all the way up to the all-time highs. So in my head, I'm like, fuck yeah, dude, this is going to hit all-time highs right fucking now. Like, this is going to do it today on Friday. We have PPI, it's bullish. Let's go. It's going to hit all-time highs. So, of course, I said all-time highs get hit today. Mark my word. A little fucking stupid. I said it looks like it wants to break out. But unfortunately, the analysis was wrong. And what was wrong about it wasn't really a market structure shift, because the real market structure shift happened here, right here, as you can see, with this standard deviation. And if you know anything about my strategy, right, what we always target is a negative 2.5. And if we feel risky, negative 2.5 or negative 2.25. And if we feel risky, negative 2.5, right? And we just stop there. We don't go higher. We can go higher, but we won't. But look at it. What's wrong? And if you're still paying attention to this video, what's wrong? Pre-market has already traded to it. So we're not in a position to hit this. The 930 is this candle over here. So this candle, when market opens, is already above our take profits. Like, does that make sense? The strategy is already over before it began. So I was like, fuck. But I didn't notice this because remember, my standard deviation, where was it? It was down here. And so I was like, oh yeah, this is perfect. Oh yeah, it's gonna go up. So what was I thinking? I had this 1 hour liquidity, or buy side, if you will, buy side set up. And I'm like, okay, well, what do we want to see? We want this to be something like this. I had the swing low to that swing high. Okay, I wanted to see a swing high get created. The negative 3.5, as you can see, that negative 3.5 Look, first of all, liquidity here, price runs above it, and you're wondering when and where is it going to return back to where it's supposed to be? Oh, negative 3.5, boop, to the tick. Funny how standard deviation predicted where price would reverse. That's funny. That's funny. That is extremely funny. OT, swing low, swing high. So my entry would be on that golden zone, right? So what happens? You drag it out. Oh, look at that. Would you look at that? My analysis is wrong, but the trade might be good. No. So what happens? We go long, right? Thinking, if you remember, thinking all-time highs would get hit. Stop loss, where was it? It was right here because it was very tight. I called it. I said tight stop loss. Yeah, we lost. But I know why. I know why we lost. Our analysis was wrong. That means the model that we were supposed to be trading wasn't actually being implicated. So what are we doing here? We're gambling. The fuck is this? Why do we get stopped out? This was no news event. That candle had no reason to stop us out. Why did it stop us out? Because there was no reason for the OT to be there. There was no reason for our entry to be there. There was also no reason for that standard deviation to target all-time highs. No reason. Our relative standard deviation had already been taken out. The profit target had already been taken out. The trade itself happened before market open. I should have closed my phone, walked away, did my service, whatever, and opened my phone when it's at 4, when market closes. That's what I should have done. Okay? Yeah, no entry, is waiting for it to come back down, and then I said buying, bought on OT. As you can see, called it out here. We hit the stop loss. So that's that, right? But I came back from school, and I was like, okay, let me see, because as you can see, what was our whole trade about? It hit that high time frame PD array. So I'm like, okay, well, maybe I can catch another trade, get into it, and maybe catch, you know, a nice little reversal, whatever. So price comes down. It hits this. There's no market structure shift here, so I can't do my strategy here. Comes back up. Comes back down. And here, you might be asking, well, there is a market structure shift here on the 5-minute. Oh, yeah, if you draw your standard deviation, whatever, target this, blah, 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 blah. But what's wrong? In what kind of order flow are we in right now? Yes, we're bearish, but what have we been respecting this whole time? This 1 hour fair value gap. So why would we respect price here? Why would we respect this fair value gap here? And all of a sudden hit some, it didn't sweep any highs. This was NQ and QQQ acting up. Why would we just come back down and break? There's no reason for us to do that. There's no PD array that gets hit. There's no liquidity that gets swept. Nothing allows us to break this low and go lower to the negative 2.2. Nothing. So our order flow and bias is bullish. So we want to look for a bullish pattern. So on the 5-minute, you don't see anything. But what I see and what I like is this. See this little downtrend? I hate trend lines, but this is the only time I'll use them. This is to indicate that there's something going on here. There's some highs being made, but there's also lower highs being made. So that means on the lower time frame, lower highs are being made. Lower highs, lower lows. Lower low, lower high gets broken out. What is it? Market structure shift. Welcome to day trading class 1. There you go. Okay? High time frame PD array. What I like to do is I like to come from the swing low that created the big move up and go, where was that market structure shift? So if we look, swing low was here, the lowest of the low, closed above the 1 hour fair value gap, showed bullish price action. Boom, from that one. Now, where's our remember, this is 3-minute time frame. Where's our 3-minute market structure shift? Where's our nearest swing high that created this lower low? It'd be right here. Would you agree? That little high right here? So we mark it out because it closed above here. Now, in this scenario, what I want you to pay attention is you might say, hey, French trades, this is not correct. It's not a market structure shift because this candle didn't get closed above. Well, you're right. On the 3-minute, it didn't. But if you look on the 5-minute, because this is a 3-minute candle, on the 5-minute, it closed above. Even on the even if you look on the 15, whatever. You got to look at the bigger time frames. And if we're doing this, there's another high here that gets closed above on this candle, and that's not a swing high. So two confirmations. I want you to look where the standard deviation is positioned. I'm going to draw a cube here just so you kind of have an idea of where that is. You see the kind of liquidity that's resting up here? So the first thing that catches my eye is, oh, this. I like this. I like this. And I like this. So just from the standard deviation, you see how close those liquidity points are and what we could potentially be targeting. That's what I want you to pay attention to. This model, right? You need something to target. You can't just randomly place a standard deviation there. It needs to be accumulated and it needs to be timed well, right? There's resting engineered liquidity that is resting here, waiting to be taken out. So what do? Market structure shift. Go back on the 3-minute. Yes. Now we go from the swing low to the swing high, but the swing high that created the move. Okay. So swing low, swing high. Can this swing high be broken? 100%. Can it go higher? Can it go up here? Can it go up here? Yeah, 100%. What do we wait? Breaker structure. We mark the OT anyways, just to be sure. Boom. We drag out the OT just to be sure. And if we need to move the OT higher because it breaks, well, guess what? We can easily do that. Easily. Now what happens? Price comes down, creates a swing high here. Where's the discount zone? The green one. Green zone. Is there a fair value gap? Is there an order block? Or is there any resting internal liquidity that is resting there for price to come back into? So on the 3-minute time frame, no. What about the 5-minute? Is there anything on the 5-minute? Well, yeah, there is an order block. This 5-minute big order block. Now, I'm not going to mark the whole thing. I'm just going to mark the top. Just the top of it. But where does the top line up with? Why is it dots? The fuck? Where does the top of the order block line up with? The OT. Thank you for noticing. So that's already done for me. That's 2 confirmations that this is pretty strong. What about the 1-minute? Because we did the 3-minute and we did the 5-minute. What about the 1-minute? Is there any fair value gaps, order blocks, anything like that? This is where you might have to squeeze in there. So in this range, is there anything? Right now, no. Not much. There is an order block top here, but we already have that 5-minute. It's pretty strong. I don't see anything on the 1-minute. So this is where I would rely on the OT to take my entry. Sometimes you might see in my TikToks or photos that I enter off fair value gaps or I enter off institutional order blocks. So that happens all the time. If there isn't anything like that in a move like this, then you refer back to the OT. Or you can use the OT and the fair value gaps to your advantage. What if the consequent encroachment of the fair value gap lines up with your OTE? Boom, there you go. There's your entry. Example, right? What happens to the price? I want you to notice price comes down. Does it trade down to the OT? Yes. Does it trade down lower? Yes. Does it close lower? Yeah. Is that a problem? No, because it didn't close lower than the OT levels. It closed under our entry level, but it didn't close under that the final OT level. So our entry would be something like this. Gold zone, your stop loss. First thing, what I like to do, just bottom of this, bottom of the standard deviation, right? Now, to some people that's like, oh my God, that's way too tight. I'm like, okay, well, is your stop loss down here on these lows? You'd be like, oh yeah, that's my stop loss. But what you don't realize is in this model, why would price want to take out this swing low? Why would price want to sweep this liquidity if it's already thinking of going up? Why would it go lower and try to break this, even close under this, if it just wants to go higher? Why would it do that? So why put your stop here when you know damn well that even if it closes under this OT level, you're out of the trade mentally, and like you're out of the trade if it closes there? Ask yourself why. Stop loss is there. Where's the take profit? In this case, as you can see, the resting liquidity is all here. So where's our profit target? Right here, negative 2.5, right here. Okay. As you do notice, though, I hope you notice, even on the 1 minute, you can kind of see there is a SIBI here, right here. Big zone right here. Boom. Boom. What is it? SIBI. Okay. And where does the negative 2.5 line up with? The consequent encroachment of that SIBI. So is it fair to say that we're targeting that SIBI? Yes. So I'm just going to do the consequent encroachment because it's better like that. Okay. Now, if, and you might say, what if it sweeps this liquidity, that liquidity, and it gets to that, and it taps like this candle right here is perfect. What if it taps like this and it just starts coming back down? Guess what? That's fine. That's fine. Where did that candle hit? Where is it above that high? It's above our 2.25. So that means that even if we did this and target it here, boom. Can you look at that really close? If you're still here. Applause if you're still here. Look at that. Takes right above. Boom, take profit. So if ours was higher, what would happen? Well, our other take profits, we're taking partials here. And we're risk-free right around here. So even if it comes back down, right, my break even would be up here. We wouldn't lose anything. We've already made the money. We've already made the percentage of the trade. We don't need that final push. But it happens, and it's a nice feeling when you see your trade work out like this. It's a very nice feeling, trust me. Very clean. Basically, I want to say maybe 5 minutes of drawdown, and that's about it. You're standing like this is the only part I would watch out for is this consolidation. Where is it? Yeah, that consolidation is the only thing I'd watch out for. That's when I would be on the charts. The moment I see it break out and break this high and TP, then I'm off the charts. I trust my strategy, but this is where you want to stay on the charts and make sure that it doesn't get stopped out. What I would recommend too is setting alerts. I don't know if you guys know about this, probably do, but let's say I want an alert about like price breaching above this high. I can set an alert saying like this. Add alert, I can say, oh, like TP1, for example, and I can create it. And so when price comes above this, it dings this and it goes, hey, TP1, and it can launch it on your phone and stuff. So you might want to start using that too. So that's a possible trade you could have taken, right, on SPX because of the model. If you guys want to learn, if you guys are still here, again, applaud, right? If you guys want to learn more, if you guys want to learn the model, you're not going to learn it from me. First of all, you're going to go watch ICT because that's where I got it from. So that's where you're going to watch it. And then you come to me I'm not the master of this. Let me just put it out there. I'm not the best. I'm not your freaking teacher that's going to teach you everything. I'm not the magical man that's going to make you profitable. I'm here like every other trader that is trying to make it out and that found a good strategy for him that he understands and that are just trying to help people trade. That's it. If you want to learn, if you want to help, join the Discord. Link in bio. I'll see you guys soon. Peace.